Let's get right to the head of that exchange right now. Not only saw this rally coming, I might say, but the huge initial public offerings that few saw coming as well, because NYSE President Lynn Martin was saying all of this many months ago when most weren't so sure. She was. Let's see if she still is. Lynn, very good to have you. Welcome.
So great to be with you, Neil. It's been too long.
Too long. You know, I've been looking forward to talking to you about, Lynn, but first off, on this market and its resiliency and its perseverance, even in the face of all of this noise, and I'm not meaning to minimize the noise, but there is a lot of it. What do you make of that?
You know, I think this is really showing that the U.S. capital markets are the envy of the world. They are the most efficient place to raise capital. And if I look at the IPO markets year to date, through the end of last week, we had already raised more proceeds versus where we were for the entirety of 2022 and the entirety of 2023. So I'm incredibly optimistic. I've been optimistic about the IPO markets during this period. And I'm continue to be optimistic about the way the rest of the year is shaking out.
Now, I'm wondering, you talk about what's been going on in these markets. They're led, by and large, by technology. Everyone's focused on the Magnificent Seven. You know a thing or two about that. I'm always intrigued by how you started your love of technology and numbers and everything as a kid playing on a Commodore 64. You were playing video games. I was doing the exact same thing. You seem to do a little better than I did, but I'm not jealous. But you said at the time, I was just fascinated, not just at the games I was playing, but at some of the word processing capabilities, some of the art tools, all of the things you can do with a machine, and the interaction you were getting from a machine. Fast forward to today, isn't that the marvel of AI, that and all that on steroids?
Yeah, I mean, technology, if you look at the amount of efficiency technology has brought since I was playing with that Commodore 64, it's made it more transparent to invest. It's made it cheaper for you and I to manage our portfolios. It has made the markets more interconnected. It now is adding that next layer of transparency through artificial intelligence, like you just said. But importantly, artificial intelligence is just the next generation of what has been a data-driven trend. It's all about the data. If you've got good data, you're going to add transparency and efficiency to marketplaces, to your life, to everything you do. But if you have bad data, you're going to have unfortunate outcomes. So that's the thing that I'm spending the most time thinking about, and all of us are spending time thinking about, is how do we ensure that the proper data, the high quality data, enters into the models to really generate those outcomes we're all so hopeful of.
But you know, I look at it, and I'm of an age, Lynn, where I could start saying, been here, done this, worried a little bit about this. Kind of reminds me of the internet boom that went bust. There were obviously a few, more than a few survived, and the internet has become a mainstay in who we are. And now I see a lot of companies attaching AI to what they do and who they are. Sometimes justified, other times a bit of a stretch. Does it worry you, that part of it, that we're getting ahead of our skis?
It doesn't really, because companies like us, at our parent company, ICE, we're thinking about deploying AI very specifically and use case driven. And many of the CEOs that I talk to in our community are taking a much more thoughtful approach. In other words, we all have seen where a hot trend can lead to a rush to certain behavioral changes.
Right.
That is not what was intended. I think this one's different. I think a lot of us are thinking about AI in the right way. How do we protect our data? How do we add efficiency? How do we truly transform our operations to make our businesses more resilient, more forward-thinking, build the next great innovations,
well,
and not just rush to implement?
I'm sorry for jumping on that, Lynn. I have no doubt what certainly the NYSE is doing, and International Continental Exchange. I'm more wondering about all those companies and all that you house and allow them to trade at your august institution and elsewhere, that they can't all hit it out of the park, can they? I know we concentrate on these so-called Magnificent Seven, but if you look at the NASDAQ 100, if you look at the ETFs tied at your exchange and others around the world, to technology, they're running away with it. And I'm just wondering whether that could get long in the tooth. I know valuations have improved as these companies prove they can make a lot of money, and that can justify a lot of bump up in price. But how are you on this and sorting it out?
But importantly, our community is being very thoughtful about that one pillar. That's so incredible. That's so critical to the implementation of efficient AI, and that is data. How do you protect your data? What proprietary methods, methodologies can you build to ensure that your data is protected and is helping you generate the right outcomes? If I look at our community and I look at our listing standards and the average market cap of our companies, it's the largest companies in the world. A lot of times they are the most thoughtful companies in the world. It's why the average market cap on the NYSE is around 16 times higher than that of other exchanges. Our companies spend a lot of time with a thoughtful approach and deploying a very thoughtful approach to implementing newer technologies. But it's a conversation that we're having with everyone in our community.
I'm sure. I mean, and that's quite a community. I oftentimes do look at a lot of surveys working at Fox, both News and the Business Network, a lot of polls that have come up, a lot of consumer sentiment surveys. I tend to pay a lot more attention, not because I don't think they're valuable, to how corporate CEOs, CFOs feel about things, because they're the ones who do the hiring, and they're the ones who might be telegraphing any problems down the road. To a man or woman right now, it doesn't appear that they are, Lynn. Most of them are very confident. They don't see a dramatic slowdown coming. Maybe we'll come off of a blistering pace for some parts of technology, but that is their sentiment for the time being. No recession coming, bumpy ride, but a good ride. Are you in agreement with that?
I think what you're seeing is the idea that the economy is incredibly resilient. Again, we have proven that the U.S. is truly the greatest economy in the world, the most resilient, the economy that leads the way for the rest of the world. However, we still have to get to a landing. Now, inflation, the most recent inflation print was a little bit higher than everyone expected.
Right.
And, you saw the market react to that. You've seen the market react in two ways. You saw the equity markets react, but you also saw the fixed income markets react. And when I step back and I look at volatility indicators, I'm looking at both indicators. I'm looking at the VIX on the equity side of the business, which is still below 20, still very muted. It's a great environment for equities. But the other metric that I'm looking at is our own MOVE index, the Treasury volatility barometer. And that's still incredibly elevated. To me, that means the market's going to fluctuate.
Yeah.
And that's okay because of the strength of our economy. It's not going to be the situation where we're going to wake up one morning and say, okay, this is over. We're now in the clear. We're just going to have to manage through it. But I'm incredibly optimistic given the way the U.S. economy in particular has performed during the last 2 years.
What's remarkable, and we'll wrap up on this notion and this idea that the economy itself, it has been remarkable, very resilient through all of this. This is a presidential election year as well. This is usually very good for the markets. This one is proving no different. Nothing to indicate that that could change, but we never know. You mentioned the VIX, the volatility index, it's very low. People can twist that around to say we're all a little bit too sanguine, all a little bit too calm and happy about what's going on. If more of us were worried, that might be a more constructive development, but we're not, by and large. What do you think?
Mm-hmm. Yeah, I mean, I think, sentiment is still concerned. Despite the fact that the consumer undoubtedly has been what has been driving the strength of the U.S. economy, they're still concerned with the consumer. And that's because of inflation, the fact that things do cost more money. And there is a general frustration in the market around inflation, a bit of a weariness, if you will, that there are prices that are elevated of goods, services, whatever the case may be. But I don't think that takes away from the fact that Our economy has been set up to be robust. It has survived not just this most recent pandemic, but many pandemics before, many economic shocks, and every time and time again, it proves more resilient than it was previously. And I think when we get past this period, when we all wake up and have that moment like, aha, we have a light at the end of the tunnel, we're going to say, wow, our economy really showed its strength.
If the Fed doesn't cut rates at all this year, I know that's the hope that by the fall we might see something, then what?
You know, I can't really estimate what the Fed's going to do. There have been, when I woke up January 1st, the equity markets were pricing in 3 rate cuts. The fixed income futures were pricing in 6.
Yeah.
That's obviously shifted. It is something that is going to shift based on the data that is so critical to running the economy. So we'll see. I think the market, though, has proven that to go from January 1st, again, 3 rate cuts priced into the equity markets, 5 or 6 priced into the fixed income futures markets, now to the point where we're talking about 1 rate cut. And
That's
the
remarkable.
equity market's still trading at near all-time highs.
Yeah.
That's still a great story for the U.S.
All right. We'll see what happens. Lynn, always good having you. Don't make yourself a stranger. Would love to have you back. Lynn Martin, the president of the New York Stock Exchange. Not bad for a kid who started out playing on a Commodore computer. All right. Always good seeing you. Thank you, Lynn.